On the monthly, we're continuing to get this upside. We're finally hitting that 707 that we talked about yesterday. So that's nice. Able to close out a nice trade from yesterday this morning. Well, just recently. So that's actually nice when the market does what we're kind of expecting it to do or what it should do, right? And like we talked about yesterday, when we look at the monthly here, we can see that it is breaking out of a larger balance. And one thing that we talked about is that you always want to monitor for continuation before you start fading that balance. And so with the monthly being above the previous monthly balance, we still want to kind of maintain that same perspective unless we start to get back below that 46.14. And I know the numbers are kind of messed up because of the contract changes, but still, that is going to be the level that we will use. On the weekly, you can see we are hitting another +4 week. That's why the bar is green. So still one time framing higher. One thing that we talked about yesterday as well is that we need to see a cessation of one time framing, starting with the daily, but on other time frames as well, is something that we look for, is because those are the first places that you're going to see change in sentiment in the market. Yeah, you might get a cessation of one time framing on the 30-minute chart or the hour chart or the 4-hour chart, but if you don't get that cessation of one time framing on a day time frame or higher, there's really no change, right? Because we know that long money typically tends to trade on the weekly or above chart, and intraday and short money tends to trade on daily and below charts. And so those people, and I'm not saying anything bad about that, but typically don't have the amount of time available to keep their money tied up in the market to really make any changes. So we have to look for those changes on these longer time frames, and that's why we always start with the monthly time frame to help us maintain perspective throughout the day. Now switching over to the daily chart, you can see we're one time framing up once again, 1, 2, 3, 4 days in a row, breaking out of a rather large balance. You can see right here the contract change. That's what this green line is. You can see our moving averages all kind of coming into agreement, starting to slope to the upside. Now, that's not to say that it's just going to keep continuing and become parabolic or just never turn back and look, but it is something to pay attention to. Now, we do have this gap over here from on that. We'll draw it the other way. So the low or the high of the gap actually is 47.15, and the low of the gap draw it like that. The low of that gap is 46.94 half. Now these are adjusted or back adjusted contracts, right? I'm adjusting for the contract changes. If we don't adjust for the contract changes, right, we're above that level. So it's really just kind of what it's just kind of going to depend upon what you want to do. It's up to you. I typically don't adjust for them, but it's kind of just something that's setting up here that makes it a little bit easier to track, right? A fill of this gap would really kind of indicate to us that the continuation, or that we're going to continue to get that continuation, and that probably all of the selling has maybe given up. So with a fill of that gap, the next level up that I'm looking for is really that 47.68, so about 100 points higher than yesterday's close, or actually only about 68 points higher than yesterday's close, and only about 50 points higher than, or only about 60 points higher than the price right now. You can see the 47.08 up here. The market is actually trading higher coming into the open, looking like we're going to be opening up on a gap. We'll go ahead and switch over to the profiles here. And as you can see on the profiles, we've got overnight inventory. Yesterday settled 46.97 quarter. And we've got overnight inventory 100% net long. This is that gap that I talked about, marked in pink. You can see it says gap right there. We did finish yesterday on a spike to the upside with a nice close on the high. This is another day, another spike, right? We had talked about the past couple of days, price spiking into these upper prices, looking for that acceptance. So the market continues to remain in an imbalanced state until we start to see some acceptance. We had kind of seen that acceptance a little bit on the weekly as the weekly took a little breath and started to balance, but now we're getting that continuation. And so we want to continue to go with the market. There was, I guess, some people getting short yesterday, most likely. Um, Only God knows why. We had talked about, right, value, value, value. Value is the most important thing to pay attention to in the market. If you can, or if you find yourself being addicted to price, just cover it up. Put a piece of tape on your screen, or take the pen and just color this in, and just stop paying attention to it. Um, my friend Tommy shared with me this guy's podcast, and he was talking about one of his biggest weaknesses was that he was trading his P&L, and that's such a big thing, I think, with a lot of people, is that they get so focused on did they make money or did they lose money, rather than did they make a good trade or not. And it really is just so important to just pay attention to the trade, and with that, value, right? So if we take a little peek back at yesterday, and you really can see that value developed higher early on. We did get that pullback. So if you watched our video yesterday, we had talked about a break underneath the 68 may cause a little bit of liquidation, so we needed to be careful. Traded almost back down to the weekly +4. B period opened up, didn't take our 68. We got long. I mean, almost everybody in the room was long before B period. I think one of our members, Doped, was long from like 65. I got long 67. I think Tommy was long from 68. Everyone was pretty much long, and then we had a nice ride into the close. And there was one pullback, really didn't do anything, and it made sense because it pulled back to an area that we had marked as support / resistance, and then continued on for the rest of the day as value developed higher. Right, so there was really no point yesterday to get short at all, right? And that's something that's key, is like, if you can eliminate one side of the market from your perspective or from your daily bias, it's really going to help you out. So jumping into today, we can see that we're opening up on a gap, and gap rules are going to be in play, right? And one of the most important rules of gap rules is you want to go with any gap that doesn't fill early. So if they don't try to fill this gap early, meaning they don't try to trade the market back into yesterday's range early on, then we don't want to be getting short, right? Now, if we start to see some negative activity, and that's really going to be if the market's able to get underneath of this overnight point of control that happens to be very wide. Underneath that overnight point of control, then we can start looking for that gap fill. Not a huge move, 02 to 98, not a huge move, but a real low risk type of trade there, right? You'd put your stop right above that POC, and if it goes, it should go quick and should go early. Now, with that being said, we still have that opportunity for play number one, which is a trade back into value and hold, and then look to take back to the previous day's high. You can see this weak spot in the profile yesterday. We actually had a couple sets of single prints. So if we come down, fill this set of single prints, or fail to fill this set of single prints, there's going to be some long opportunity there, looking to trade outside of the value back up into the previous day's range and back up into this gap. Now, there's two opportunities there. And the third opportunity really is if the gap doesn't fill and we don't trade below this, or don't get confirmation below this 04, that's going to be a nice long here. And really, there's no point to even close that trade or even think about closing that trade unless we get back into the previous day's range. And even then, there's a nice ledge here about at the 94. And unless we can get below that with some conviction and some size, there's really no point to just not ride it out. Now, we do have some news today, right? Some very significant news. We've got the Fed funds rate coming out at 2. We've got the FOMC economic projection at 2. We've got the FOMC statement at 2. And then we also have the press conference coming a half hour later at 2:30. So the market should get, or most likely will get, fairly volatile starting at 2 into 2:30. And then depending upon what Powell decides to come out and say, the market should get a little bit uh, volatile. So for newer traders, or really for anyone that's not in a longer term position, you can try to ride the bull if you want, but you're oftentimes better off just sitting out, watching, and paying attention to where value is developing. There may be some opportunity. Let's say if we're building value up here all day, and then you see this big liquidation break and it starts to bounce, and you get an opportunity to manage risk and look to trade back into value, well, then that's an opportunity that you can probably seize. But remember, it's coming with high risk. So unless you can mitigate some of that risk in the trade, you really just want to be extremely careful. But other than that, I'll catch you guys tomorrow. Everyone, make sure that you're managing risk and sticking to your trade plan, and have a good day.